You're the only one that's making the changes, yet you're paying the plan sponsor for the right to make your own changes in your own account instead of them helping you with those decisions.
Welcome back to Investing with Confidence. I am your host, Joshua David, talking about the financial markets, how they work, the different assets, and how us as the average person can also participate with that smart money. Don't forget to subscribe to the podcast wherever you listen to podcasts. Also, check it out on YouTube. Al, as we get into this next topic here, we were talking about earlier a couple of those C words. You were talking about choices. People are looking to make better choices during their working years, but also during retirement.
Right.
And it comes down to having more control of that pathway to retirement. And control means being able to make your own decisions in there, not relying on a stranger. Because if you think about this, people that have managed money, it's typically done by a stranger. And what is their motive or their plan? Their goal is to make money for the company, right? Now, what is your goal? What is your objective? Do they even know what that may be? Do they know when you want to retire? Do they know what type of lifestyle that you want to have? You may have mentioned that at one point, but that was probably the only time you had that discussion. And do things change over a lifetime? They say things change every, was it 4 to 6 years in your life? So you may have different objectives within that pathway to retirement. So let's talk about that. What are some of the things that average investors, the public like us, what can we do with our retirement accounts to potentially make that pathway a little bit clearer to retirement?
Well, people have, I think, kind of been conditioned to believe that there's this great thing called a 401k or 403b or whatever your employer-sponsored retirement plan is. That is what's going to get you through retirement. And so all you need to do is you make some choices. They're going to say, here is a list of things you can invest in. Now you choose, and then you're going to be great. Well, the problem is that the things that are available there that you can choose from will only benefit or provide the opportunity to benefit if the market does what?
Goes up.
Goes up. So what about the manager? What about the mutual fund manager? Are they going to make money off of you when the market goes up? Yes. Are they going to make money off of you if the market is flat? Yes. Are they going to make money off of you, off of your 401k if the market goes down? Yes. So they're making money all three directions with these fees, yet you only have the opportunity to benefit if the market goes up.
Imagine that. That
So-
doesn't make any sense.
Right. And the problem is that these people that are providing these plans are not providing any kind of guidance or education on how to properly manage your 401ks or 403bs. Did you know you could do that? You can manage those. You have the ability to make changes. In fact, you're the only one that's making the changes, yet you're paying the plan sponsor for the right to make your own changes in your own account instead of them helping you with those decisions. So you're already kind of managing those accounts. One of the things that we do, if that is the only asset you have in retirement or going into retirement, at least get the greatest benefit that you can out of it. We go over what we call dynamic 401k management, showing you how you can manage the assets within those retirement plans and how to make sure that if there is a bear market or major correction, you can rotate into something that won't take a large hit when we go through a bear market, say a 20 to 50 or 60% drawdown in the market. You can't let that happen to your retirement accounts because you don't have a lot of time to recoup what is lost if you go through something like that. So protection is really the number one thing. And there are choices that you have in ways that you can do that.
I'm glad you mentioned that dynamic 401k management because, I mean, 401ks are a great thing because they've taught people how to save. Well, the fact of the matter is we do have a retirement crisis in I guess America, right? People can't retire; they don't have enough, and a lot of it is because that 401k could potentially be managed not in the investors favor. It's the brokers are always capitalizing in the markets. And you mentioned something very interesting as well, being able to protect what you have. Because if you think about this, markets are technically at all-time highs ever. People should be the wealthiest they've have ever been right now. Is that the case? It's really not the case. So there's a disconnect there. And you got to learn the skills and techniques to protect that in down markets. So you're not just recouping what you already had, but also clearing out that pathway to retirement.
Yeah.
So, Al, you talk a lot more about that pathway to retirement in these investing classes. You talk more about how to manage risk and navigate these volatile markets. But I think the most important one, I believe, at retirement portfolio management is how to buy at wholesale and sell at retail, just like the financial institutions do, especially in that portfolio. So let's go with callers 1 through 10. I want to give away 20 tickets to this investing class that we do right here at the Academy. You're going to receive 2 tickets when you call in right now, plus the financial quick start kit. That will help you get started right away. The number is 952-814-4410. That's 952-814-4410. Al, you talked about the protecting what you have, so you're not just recouping after down markets. The fact of the matter is markets are at all-time highs, so now is probably the best time to prepare and learn and build those skills for that. And what we're talking about is self-directing.
Right.
You were talking about those fees. What are some ways you could potentially lower or potentially even eliminate those management fees? And that could be a return in itself.
Well, yeah, we look at your life, your financial life, kind of as 2 buckets. One is your income bucket while you're working and accumulating assets, and the other is your wealth, your retirement bucket, where you're taking distributions. And there's a different way to invest for each of those. We kind of look at them in buckets: your income bucket, your wealth, retirement bucket, and just like a bucket that you would fill with water, if your goal is to have that bucket filled up, if there's a hole in the bucket, regardless of the size of the hole, it's going to take you longer to get it filled up. One of the holes in your wealth bucket is fees, the impact of fees. You can look at that as like somebody took a drill with a pretty good sized drill bit, drilled a hole in the bottom of that bucket, and then instead of water leaking out, it's sucking out the dollars that you have put aside for retirement. Now, what if somebody comes by with a huge saw and cuts a good part of the bottom of that bucket out? And maybe 50-60% of it is drawing out. It's disappearing from your retirement bucket. That's what can happen if we go through a bear market. And there are a lot of people that are listening now have never experienced that. They weren't in the market back in 2008 or in the year 2000, but there are a lot of people that retired in the year 2007, then saw half or more of their retirement accounts taken away. They weren't planning on that. They weren't expecting that to happen. And that's the thing. We can't predict when something like that could happen. There are what we call black swans, events that happen that we're probably after the fact we can identify, but we don't necessarily see them coming. The point I'm making is that you want to be prepared. It's very much like, let's say that you have a house and you have decided not to get fire insurance. You come home one day and your house is on fire, and you call your insurance agent and say, hey, that fire policy we were talking about? And the insurance agent is going, well, are those sirens I hear in the background? What's going on? You cannot buy fire insurance while your house is on fire. In the markets, with your retirement accounts or with your investment portfolios, once the market does start to go the opposite direction, it's too late. You need, as Josh said, now is the time to get the education. Now the time to be prepared, because corrections and bear markets are a normal part of how these markets function. We may not see one for a while. We might. We don't know exactly when it will happen, but there will be some kind of a pullback at some point in time. A lot of people will be prepared for that, not only protect what they have, but they will learn how to benefit in those down markets, because there are strategies that can be utilized that can benefit you if the market is correcting or going into a bear market.
Yeah, I'm glad you brought some of that stuff up, because the mindset of people is, people are in euphoria right now because the markets have been chugging along. They've been going up for quite some time now. That's a great thing for average investors. if they only know that one dimensional strategy, which is buy and hold it, hope it goes up, right?
Sure.
That's why now, as Al's talking about, is the most important time to prepare, because we know it will happen. But you got to have the proper mindset to be ready for that. So that way you're not making emotional decisions, especially in retirement accounts at that time. And Al, I'm sure a lot of people are probably wondering, we've been talking a lot about construction, bulldozers, a saw, drill bits,
Houses on fire.
drills. We're not going to continue to talk about construction. We're going to talk about building, but how to build a proper investment plan coming up next. We will be right back.